Good morning and welcome to the legendary Verified Investing YouTube channel, the Drew Wolfer YouTube channel, the Verified Investing Twitter, Drew Wolfer Twitter, wherever it is that you are watching the Golden Nugget every single Wednesday at 11:30 Eastern Standard Time. We appreciate you. We would not have a platform without you. Hopefully everybody's having a good time in the markets right now. Gold is reaching new all-time highs every single day, and we're actually going to talk about that because most people are scared to trade all-time highs. So in the Golden Nugget segment of the Golden Nugget, we're actually going to address that. We're going to talk about it, and just appreciate everybody for showing up. We went 4 for 4 this week on trades. Another 100% week. What's that, like 8 in a row? 6, 7, 8 in a row, something like that. We've lost one trade ever since this show aired. And if you don't believe me, go check the win rate on the website. And I'll show it to you live here in just a little bit whenever we get into the Golden Nugget segment. If you are here for the first time, thank you seriously so much for showing up. Consider showing up every Wednesday at 11:30 Eastern Standard Time so that you can hear from the man himself. The Golden Guide, because you show up for the braids, you stay for the trades, and I am your Golden Guide to everything that's happening inside not only the metals markets, but the broader financial markets. So, what are we going to do on this show? We have a few different segments. And again, thank you to everybody that shows up every single week faithfully. Seriously, that means a lot to us. Humble appreciation from our side. First thing we're going to do, we are going to gauge gold. We're going to talk about the trades that went well last week. We're going to talk about the trades that didn't hit. Then we're going to give you the trades for this week, right? We're going to do the same thing on silver. Then we're going to do the commodity compass, where I tell you everything that's happening inside of the broader financial markets. We've got a government shutdown. We've got rate cuts. We've got, all this wild stuff is happening right now. We're going to talk about all of it, and we're going to tell you exactly what could happen inside of the markets when this is happening, right? Secondarily, we're going to do the Golden Nugget segment, which is where I give you a high-level insight from a verified pro trader that has a documented, at the time of the recording of this video, almost 89% win rate over the past year inside of verified investing, okay? I'm going to give you a high-level insight from my training, because you can show up and you can get the trades every single week, right? And you can do very well. But if you want to actually know what's inside of my head, you have to get inside of the golden opportunity, and that is the training that I brought out in conjunction with Verified Investing on their platform. So then we will get into our two special segments after that, and then we'll talk about the economic calendar, what's going to be coming up the next few weeks. So let's get into our very first segment, and you already know what time it is. It is time to gauge gold. Now, let's talk about it, all right? So gold just hit a new all-time high right here at about 38.95-ish, right? Give it a couple of cents, and give me a dollar or two to be, off of the, let's see what the high was. Let's see what the exact high was. Exact high was $3,895.19, and we killed it on our trades last week. So without further ado, let's talk about what this all looks like, right? So we had one trade that hit twice last week too, which was absolutely insane. It was beautiful, and for all intents and purposes, we're having a really good time. We're over here, we're partying. Everybody's making pizza money every single Friday, having a good time, right? So this is the first trade that hit, right? We were basically consolidating here. We said, hey, look, last Wednesday, right? We said, look, we get back above this 50 moving average, we back test it, and potentially test the 100 at the same time. We're longing to the top end of this parallel, this very, very long-standing parallel. Let's get to the daily chart. I'll show you the parallel. Actually, we don't need to go all the way to the daily chart for me to show you this parallel. Look how long this thing has been standing up, right? All the way back here to November 2024. I mean, look at this thing. It deviated outside of it once here. It deviated outside of it twice here. We're deviating outside of it again here, right? And I mean, look at the deviation on this one, right? Look at the deviation on this one. This thing absolutely ran up, 8% deviation to the upside, right? Probably a 3% deviation to the downside. If we get an 8% deviation to the upside on this one, oh my gosh. I mean, for all intents and purposes, we're going past 4K, right? We're going to $4,150 potentially. So let's talk about this trade, right? We know why we took it. We know that we entered at the exact perfect time. We had zero drawdown, unlike most traders. We had essentially zero drawdown once you got into this trade on the bounce. You had 1, 2, 3 candles to get in, bang, you rode it all the way up to the top end of the trend channel, and then guess what happened? You got the exact same trade all over again. You got it right here at about 38.02. That's what I got in, and I got in at about 38.02. You could have got in around 38.06. If you waited for it to regain it and then retest it and then bounce. You could have even got in at 38.09 if you waited a few candles just to make sure, right? And now we are writing this up, okay? So we have already taken this all the way up to almost $3,900, but we're looking for more on this, and if anything, the stop loss is getting set right here at about $3,830. Basically, you're trailing it under the upper end of this trend channel. Now, let's talk about the ones that didn't hit. Now that we know we have our 2 for 2, right? Because this one is guaranteed to be in profit. So you can chalk that up for the win column. Absolutely incredible trades. If you left a runner on that first one, man, you are in the money big time, okay? So let's talk about what we also had last week, right? And let me zoom out just a little bit because there's going to be some trades that they're very, very far out that we still have the levels on the chart, okay? So we have the longing of the value area low and the ascending triangle. So what's the ascending triangle? It's right here. It's on the daily chart, right? You got to scroll all the way back over here. As you can see, bang, 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 resistance, bang, 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 support, breakout. We've never retested this, never even came back close to it. This is going to be a massive level of support, okay? Right here at about $3,443, so call it $3,450. And secondarily, you also have it, you also had a, where's my FRVP? There is a value area low on our macro FRVP. If you give me 1 second, I'm going to try and find that FRVP. I don't believe, let me see, macro, I believe this was it. I'll have to find that FRVP. I don't want to waste a bunch of time and waste your time trying to find it right this second, but just know that there was a value area low from this range that where we went parabolic from here all the way up to about here, bang, before we got our nice little consolidation zone and pullback. So we measured it from this top to this bottom, and the value area low was right here. So that would be a nice longing opportunity down about 34.50, call it 34.50. Then you've got your parallels bottom, right? If you come down here to the parallels bottom, great, long it, right? We're going to move these trades over to make them present day trades as well, right? Bang. So you come down to the bottom end of the parallel, you are longing again, right? You can also long the POC bounce. Whoops, I just moved the wrong thing. That is my fault. I apologize for that. See, move this POC bounce. Dang it. There we go. Okay. And your 200 moving average. But this, as it sits right now, is not a trade that I'm necessarily looking at. I'm now looking for the long of the 2.236. Okay. So long 2.236 fib level bounce. Okay. Now we also have our shorts, right? If you lose this parallel, again, you're shorting, right? I think we all understand why we're doing that, right? And we're running it down all the way here for a 12x risk to reward. This trade never hit. It was shorting the loss of the point of control and the 200 moving average. We never lost it. We just kept regaining it, and then we moved up. So we can actually delete this one. This one is no longer, that's nullified, right? Then this trade obviously never hit, right? We never even came close to that level. We never lost the 200 moving average over here. So, you can take this one out. Then we had the loss of the 50 moving average. And if you got that trade, great. You got a nice little scalp on it. You took profits at the 100 moving average and at this swing failure pattern. As you can see, you swing failed this low right here. And you can kind of take that one off of here as well. But what we will do is we will actually delete this one because we have different trades coming up for this week. Then we have the value area high rejection, the SFP, and the bearish divergence. That never happened, okay? So we never came back up here. As you can see, we never got that SFP, right? Because we just started bang, closing candles above this previous high. So now what we can do is we have a different SFP that we can look at at a later time, right? And I'll show you that here in just a second. Bang, you can short the parallels rejection. Now, if you reject at the parallel, it's going to be somewhere right around here, okay? And that is what we are looking at. Now, 50 moving average, you can also long this, but we're going to leave this on here because we already have it. We're in a long position on that right now. Then we have the long of the parallel top. That actually happened right here, but we did not get into this trade yet because you lost the parallel and then you regained it. You never back tested it. So you got to wait for your back test, right? So you can enter somewhere around here, around 3,820 bucks. Set your stop loss below these lows, right? And set your stop loss outside of the 100 moving average, okay? And if the 200's even closer here, even better, right? Now, what can we do this week? Well, as you know, you can short that SFP if you get a swing failure pattern up here with a bearish divergence, which, what do we mean by a bearish divergence? Let's show you. If price comes up here, you get an SFP right here, right? And your RSI comes up and sets a lower high, right? You would like to see a higher high here, but a swing failure pattern, right? And then a subsequent move down. Okay? So let's go ahead and get this. Sorry, give me 1 second. Let me get these things off of here. And bang. Okay. Boom. So we know about the SFP. If we come up here, we set an SFP, we get a bearish divergence, we are shorting down to the bottom portion, or actually it's the top portion of this parallel. Secondarily, if you get all the way up here to $4,000, which if you know what $4,000 is, it is the 2.618 trend-based Fibonacci level that we've been talking about for quite a while. You can short it back down to the previous highs and even further. Obviously, watch what's happening at those levels once you get there. Secondarily, we can also take a long at the 50 moving average, okay? Take a long at the 50 moving average. If you don't get an SFP up here, say you come up here, you close a candle higher than the highs of these candle, no bearish divergence, you get your back test of the 50, just like we did here, bang, and you're running that up to $4,000, right? So there's set parameters for these for a reason, right? We're not just picking out these levels and throwing darts at a dartboard, okay? So let's get into the next segment now that you have all the levels and all the trades on gold for that kind of support that 89% win rate. And let's go ahead and do the silver snapshot, all right? So silver, we absolutely killed it on last week as well, okay? So let's see, where is our silver trade that we actually hit? Bang. Okay. So we got the perfect back test. No SFP, right? And this is why these parameters make a difference, okay? No SFP, no bearish divergence. We came back and tested the point of control, okay? Which was at the time right here, and the value area high of that previous range, okay? We came back, we back tested it perfectly right there, right? As you can see, bounced off of the 21 and the 50 moving average, boom, subsequent move up, perfect entry, perfect exit, absolutely killed it, and, not much need more be said there, right? And then guess what? You came right up to the point 1.786, you broke through it, you back tested it, and, I don't think that we had that long set up, so I can't, tell you that, hey, you can't predict everything that's going to happen. Like, did we know that silver was going to take like a 5% move up in a couple of days? No, we didn't. So honestly, I hadn't given anybody this trade. This would have been a great trade though. But if you were in the golden opportunity, you knew that this was the trade, right? I'm only here once a week, so I can only give you so many trades. I can only lay out so many scenarios in that time, okay? So let's talk about the trades that, didn't hit. Obviously, we got your point of control short down here, right? That did not hit yet. And the, 1.5 fib loss, right? Which is right here, this orange line, okay? Then you've got your short of the 1.618 fib. If we come down here, you can short if you get under it, bearishly back test it. You've lost all the moving averages at that point. So, it's probably going to take us a while to get down there. This was a no trade. There was no SFP, and there was no bearish divergence here. Again, this is why we lay that out. This level, because, this level did get hit, right? This level did get hit, but you would have gotten stopped out, right? You would have gotten stopped out immediately. Why? Because there was no SFP or bearish divergence here, okay? So the markets were telling you don't take that trade. Same thing here, right? Short the value area high in POC with a swing failure pattern. No swing failure pattern right here, right? And we used it as support and then blasted off. So again, this is why I set up the trades in the way that I do. You have to pay attention to the parameters. Then you can long the support down here and the value area low. We can delete that because we have much better trades down here that we don't need to pay attention to that. One of those trades actually being the point of control bounce right here, or the 1.5 Fibonacci bounce, right, which is right here, okay? So watch for those levels, okay? Then the 1.618, which is right here, okay? The 1.618 level is right around $43.14. If you come down here, you bounce from it. Again, watch out because you've lost the 200, the 100, the 50 moving average, the point of control, and the value area high and of the macro range and the value area low of the micro range. So, is this trade something that you're going to do? Maybe. You have to see what the, conditions are and the parameters at the time that trade hits, that level hits, okay? Now, secondarily, let me go ahead and line these up and make sure that these are all like set to present day. We want to move these all over here. Boom. And there's a reason I don't move all of these before the stream, and it's because so that people can go back and cross-reference this with the previous video, and just in case they're trying to fact check our trades, our call outs, my track record, things of that sort, right? So we already know about this. We came back, we back tested it. That was great. And we can, for all intents and purposes, we can delete this trade and bang, right? Now, what can we do now? Okay. If we come up to this 1.786 and we blast through it to the downside and you bearishly backtest it, you're shorting. Okay. And this, you would also be losing the 100 moving average. Now, depending on when you hit that level, this 200 could be up here, even bigger points, brownie points, if you get a 200 moving average loss at the same time, right? That would be an even better trade, right? Secondarily, if you come up here and you set a swing failure pattern at these highs, which if this closes right now, you won't be setting a swing failure pattern, right? And this closes in 4 minutes, right? So my guess is you're probably not going to get a swing failure. Your swing failure is going to need to be more up here towards about $48, right? So let's move this up just a little bit. You got to swing fail this high with a bearish divergence at 14-year highs. That is a shortable opportunity. I'm not saying that it's guaranteed. That's why I give the parameters that I do. I'm not just telling you to blindly short at 14-year highs. I'm telling you exact parameters on exactly how to do it. And if you want to know why I set these parameters, go check out the Golden Opportunity. You'll know exactly why. Now, if you come down here and you test the 1.786 fib, excuse me, like you did back here, guess what you're doing? You're longing, but you have to see the bounce. You have to see the bounce first. Now, brownie points and even further confluence if you bounce here and the 200 moving average is in there intersecting it. And 200 MA bounce. Let's give you some brownie points if you get that, right? Not the 2300 MA, the 200 MA. Sorry about that. Secondarily, one right here is the 100 moving average bounce. If you get the 100 that intersects the value area high here at $46.70, you come back down, you don't have a swing failure pattern here, right? And you come back down here and you back test this bullishly, you are bouncing. You're looking to ride this thing up to new highs, and ultimately your next target is going to be $49.35. Your ultimate target is $50, right? Third, if you come down here and you retest this prior resistance, bang, 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 resistance, used as support, boom. And if you bullishly back test this and you don't have an SFP, which as it sits right now, if we close now, you will not have an SFP, no bearish divergence, and you bounce from the 50 moving average, that is long city, and you're looking to ride this up again to at least new 14-year highs, and at the very least, after that, you're looking at $49.35. You can set your stop loss outside of these lows right here, this wick, maybe even set it a little bit tighter, right? Outside of these lows right here, bang. And that is what we are looking at inside of the gold and silver market. So now that you have all of the trades that you could possibly have, let's talk about what is going on inside of the market, because we just gave you, and let's be real, we've been giving you killer trades for the better part of 3 or 4 months on this show and on this channel. So, if you are taking any profits, if you are liking the analysis, if you are taking any of these trades, drop it in the comments section for me. Give us a like on the video, man. That's all we ask. We don't ask too much. We'll give you this free value every single Wednesday. We'll continue it. But just do your part if you could. Drop us a like, support the channel. Now, let's talk about the commodity compass, right? What is happening? What's driving gold, right? And the broader markets right now And what's the near-term outlook? So, of course, we have gold surging to new all-time highs. We have silver surging to 14-year highs. I'm cheering it on. A lot of people are out here super bears, right? I don't know why people are bearish in a gold super cycle that has literally hit every parameter to be called a gold super cycle, with central bank buying at the highest that it's been in decades, with, the economy the way that it is, with inflation somewhat slowing, right? With money being printed. We have the M2 money supply, which we'll talk about here in just a second, at all-time highs, right? Why people aren't just looking for better entries to long, just like that's exactly what the central banks are doing, I don't know. But we have the government shutdown. This is the first time this has happened in 7 years. So gold price has hit an all-time high today because of that, and silver, obviously. We did get that closed, by the way. There's no SFP here, just so that people know. Okay, now, the Federal Reserve's hands might be tied, okay? Traders are now betting heavily that the Fed will be forced to cut rates sooner rather than later, okay? And they're betting that there's going to be 2 more rate cuts this year. If there's only 3 more meetings, right? So that means 2 out of those 3 meetings, we could see a rate cut, or you could see maybe a 25 basis point rate cut every single meeting, right? For all 3 of those meetings. And the expectations are at least another half a point, or 50 basis points, or 0.75 of a point rate cut, or 75 basis points. Now the DXY is continually depreciating, okay? Everything else is pumping, and this is cushioning the floor on safe haven demand. So the weakening US dollar, and then obviously growing demand for assets like gold and silver, have driven bullish momentum and a nice floor, along with central bank demand, right? Dovish economic data is actually expected for upcoming data, insights, right? Now, this is adding to the tailwind on gold. If you know what a tailwind is, it's whenever you're flying a plane and the wind is going with you. So you don't have to do as much work. You can go faster, easier, right? If you've got a headwind, it's harder to get where you're going, right? So we absolutely have a tailwind right now in gold. Now, the dollar has slipped against pretty much all major currencies, whether it's, the euro or, Swiss franc or whatever it may be, right? This is also supporting gold's rally. Now, with geopolitical uncertainty and the rate trajectories kind of confusion, right? Gold's safe haven appeal has actually strengthened significantly just in the past week since you saw me last week. So looking ahead, obviously, we're bracing for a slew of key data releases. We've got jobs numbers and Fed commentary. This could either, confirm or reverse the trend, right? Reinforcing it, or just saying, hey, we're going to pull back, okay? So what are we looking for? Any signs of sticky inflation or robust labor data could actually dampen the hope for early rate cuts, and that could, send gold a little bit lower. But ongoing political instability in Washington is actually adding to the floor on gold and kind of helping it, pump up. We've got top brass that got called and reporting to DC without any explanation as to why. That's going to freak people out. That's going to get them into safe havens, okay? Now, let's do our 4th segment, the Golden Nugget. And I want to talk about why most people are scared to trade all-time highs, okay? And for this, man, let's just pull up the chart. Let's just pull up the chart, man. I am not scared to trade all-time highs. I am not scared to trade all-time highs. If you are inside of the golden opportunity, you know that we're not scared to trade all-time highs. If you're watching the Golden Nugget right now, over the past few months, if you've been in verified investing for any significant portion of time over the past year, you know darn well that I am not scared to trade all-time highs. I'm not just going to blatantly and blanketly come out and say, oh, we're at an all-time high, short, right? Because that's what most people do, but most people don't know how to trade. So they're going to say, oh, all-time high, short, right? Look at NVIDIA. If you would have been shorting NVIDIA over the past couple of years, you're getting wrecked because it's just consistently all-time highs. Look at gold, consistently all-time highs. You're getting wrecked. Look at silver, consistently all-time highs. Look at Bitcoin, consistently all-time highs. If you're just shorting because of all-time highs, it's a recipe for disaster. So get inside of the golden opportunity where I teach you exactly how to trade these all-time highs. And if you don't believe me, we can prove it to you, right? If you were watching, right? If you were watching gold over, say, just the past year, I don't know, the past year, right? And every time we hit an all-time high, you shorted, right? You would be getting absolutely wrecked because we just kept going up, right? Let's say back to, I don't know, October of 2024, right? All-time high, all-time high, all-time high, all-time high, all-time high, right? This one maybe would have worked out for you. You would have gotten out profitable. All-time high, all-time high, all-time high, all-time high, right? And then you just kind of capitulated, all-time high again, right? So if you notice, And if you go to my page where I've got the win rate, right? My win rate dates back to, I believe it was like November of last year. Gold has been at all-time highs this entire way, right? Look at the trajectory of it. It was at, $2,600 when we started trading it. We're up at almost 4K now. If I was just saying, hey, don't long, like look how many shorts we have. We have shorts, but we also have long, right? So my point in saying this is people are very scared to trade all-time highs, but there's tools, there's levels to this, right? And if you want to level up, I can teach you how to do it. But I can show you the levels every single week whenever we're hitting those new all-time highs and saying, hey, just because we hit an all-time high doesn't mean you short, right? Especially when there's central bank buying at record levels and they're buying on the dips. So why would you be shorting, right? If you hit the level, you take the long. If you blast through the level to the downside, you bearishly backtest it, then you short. It's very simple. You're not just shorting because we hit an all-time high. And that's what I see a lot of people do. And that's why I see a lot of people getting wrecked in the markets, right? Now, let's get into our fifth segment, right? Now that we've talked about a key concept that we cover inside of the Golden Opportunity, feel free to get into it if you want to. Let's talk about the market movers, okay, inside of our special segment. Now, the focus on this. We've got leadership shakeups at major gold mining companies. Again, so this is why I trade gold and not miners. Because again, if you're longing miners and these things happen, the bottom's going to fall out of them, right? So gold is the actual asset, okay? If you want to trade miners, that's a company. Those are people that are running that company. You don't know, randomly a CEO could get, a DUI, hit somebody on a bike over the weekend, right? But gold can't do that because it's not a physical person. There is no, it's just an underlying asset. So that's why I kind of stick to gold. You can trade GDX. You can trade, these gold miners and Newmont mining and stuff like that. But these are the things that will move the needle on it that you cannot predict, okay? Longtime CEO of Barrick Gold, Mark Bristow, he abruptly stepped down. He didn't give any hint to this, and Mark Hill has now taken over as the interim leader, right? Investors are now left to their own devices, and they have to assess what strategic changes may emerge under this new leadership, okay? So these are things that you don't want to have to be worrying about, okay? Now, if it's just in your long-term buy and hold portfolio, totally get it, understandable. If you're actively trading it, these are the things that can, screw up your position. Okay. Now, Newmont Mining also announced its CEO, Tom Palmer, will retire by the end of 2025. Again, shaking up the markets. Not as much as Barrick, where he just stepped down at, like a flip of a switch, but Natasha Viljoen will be the one that replaces him at the end of the year. Okay. These leadership changes, let's be real, they're coming at a critical time. Both firms are navigating cost inflation, okay, geopolitical risk, and shifting global demand. So the implications of these regime changes, market participants are now speculating on how this might affect capital deployment, right? Mine expansions and strategic M&A, which is mergers and acquisitions activity. Are they going to merge? Are they just going to stay, how they are? Who knows, right? So this kind of just serves as a reminder that when you're trading these, remember that they're companies, right? But gold is just an asset. Gold has the inability to have its CEO step down, right? And, here we are. So what's our last segment before we get into the economic calendar? Central bank watch, baby. The central bank gold buying remains strong. Macro headwinds and macro uncertainty continues, right? Or not headwinds, tailwinds, sorry. So despite the volatile markets, right, central banks continue to accumulate gold at a steady pace, and 94% of them are projecting that they're going to continue buying over the next 12 months. And I think it's like 64% of them or 44% of them are actually saying that they're going to increase their reserves until the end of 2025, no matter what, right? Now, the one thing that I want to talk about, this is super important, okay? And I don't think a lot of people talk about this. The M2 money supply is at all-time highs, and we're talking like $22 trillion. If you don't know what M2 money supply is, it's basically, think about it like a stock, right? It's the market cap of the US dollar. How much money is in circulation in terms of US dollars in the entire world? What's the actual supply of our money? Well, as of May 2025, the M2 money supply reached $21.94 trillion. So they are making the money printer work overtime. It is going, right? And it's marking a new record high, okay? Now, previously, this was the high back in March of 2022 and then from early 2025. And the M2 growth year over year has been 4.5%. So that means no matter what, everything stays the same. Your dollar is worth 4.5% less, not necessarily 4.5% less, but it has been inflated by 4.5%. So you are losing money every time that they print more money, right? Now, we obviously need to know why this matters, okay? So inflation, okay? This is a laggard type of effect, but a lot of people say, oh, the M2 money supply went up on the, world reserve currency. Markets are going to pump. S&P is going to go up. The crypto markets are going to go up. Yeah, absolutely. They might, right? But with inflation, is it going to go up and outpace inflation? Or is it going to create a bubble that's then going to burst later and then everything pulls back really hard, but it's actually worth less money, your dollar, because they inflated the heck out of it, right? So a rising money supply can actually feed into inflation over time, okay? Especially if it outpaces economic growth, which at this point, it's far outpacing economic growth, right? It's going to erode, or it can at least, purchasing power and prompt central banks to respond more aggressively. Monetary, with the M2 being so elevated from a monetary perspective, the Fed may actually face a tougher balancing act, okay? Too much liquidity actually risks inflation. Too tight of liquidity risks choking growth, right? So, you're going to have to watch, right? The, data influences as it pertains to rates that are coming in, the next couple of months. Then you've got, obviously, you're flooding liquidity and you're flooding money into your asset markets. And excess money often flows into risk on assets like the stock market, right? As you can see, hitting new all-time highs, Bitcoin, speculative asset markets like crypto, stuff like that, right? And obviously, it goes into commodity and real assets like gold, right? So especially in an environment of rate volatility, the one thing that I think stands up to that M2 money supply and isn't a bubble that gets burst, it's going to be your commodities like gold and silver, right? Now, let's get into the economic calendar. Let's talk about everything that is going to be happening until next week, right? So Wednesday, which is today, we've got our jobs report that already got reported, right? Now we've got private payroll data, all that good stuff that is being reported today, right? So then we have the ISM manufacturing that is happening right now as we speak at 10 a.m., right? It's offering insights into economic growth and inflationary pressures, both influence Fed policy in the interim moving forward, right? Then tomorrow, which is Thursday, October 2nd, factory orders and durable goods, that's at 10 a.m. That is a leading economic indicator, okay? Then we have non-farm payrolls on Friday. Friday Pi Day, it's game time, baby. 8:30 a.m. This is a key risk event, okay? This could be delayed due to the U.S. government shutdown, right? Because we know the government just shut down. See what happens. But that may increase uncertainty and boost safe haven inflows, okay? So if you're in that long on gold, you're killing it right now, okay? Then we have on Friday also ISM non-farm, non-manufacturing, sorry. I almost said non-farm payrolls again. That's at 10 a.m. as well. And non-farm payrolls is at 8:30 a.m. This is a key gauge of service sector strength, okay? This is going to impact growth expectations and gold's inflationary hedging appeal. Okay. Secondarily, on Tuesday, October 7th, we have the trade balance at 8:30 a.m., which influences dollar flows. And then the FOMC meeting minutes on Wednesday, October 8th at 2 p.m. You'll see me before then. I'll remind you of it most likely. But that is what is going to be going on in the markets. You have the levels, you have the trades. I can give you the knowledge here every single Wednesday at 11:30 Eastern Standard Time. All you got to do is show up. If you want the real knowledge, if you really want to get in my head, get inside of the golden opportunity. I'll be there with you every step of the way. I appreciate you so much. Everybody have a wonderful day. I will see you next Wednesday at 11:30 Eastern Standard Time.
Imagine waking up every day with freedom. No boss, no clock, just you, your charts, and profit stacking. That is the life of a verified pro trader, and it's exactly how I built mine, by learning to trade gold the right way. I've helped countless members start winning, and now it's your turn. This is your golden opportunity to trade like a pro, live like a boss, and take advantage of the gold super cycle that is transferring wealth like we've never witnessed before. So make this your golden opportunity.